Hey guys, it's Simon. Good evening. Doing the market preview for Tuesday morning. So let's cover a couple of things really quickly that are important. First of all, this trend line that I put on the chart, posted in, goes back a couple of days here. There's another one that's even further back, but this is essentially the quintessential trend line that needs to get broken to the downside. As you can see, it's quite a bit of the ways down, sitting here at 2082. Essentially, probably by the time we get down there, I would expect responsive buyers in this area. First time in, therefore that makes that 2082 to 2080 zone very important. This is a smaller trend line from today. Obviously, that would be easier to break, but importantly, there is no downside even to this larger moving average unless we get underneath this this moving average here to the upside. So the important things on the chart. First of all, 2114 to 2117 is 3 points wide. It is the year-to-date high currently, right? So a couple of things. First of all, that is a 30-point rotation up from today's close. I would expect responsive buyers there the first time in, right? Secondly, if we trade above here, obviously all bets are off on short side trades. What I need specifically to look to the short side up here is a swing short to develop. All right, so we push up, come up, push up here, right? So I need swing short to develop, right? We come around, swing short, right? I want to see, so this box would create structure, ideally, right? We push above and then push back in. This close back in would create structure, and that is where I would be looking for a short. Otherwise, I'm not going to throw zones up here. There's no point. Importantly, I don't think we're going to be able to get much past here. This is also a trap point to move back in just from a structure process if we trade above and close back in. So I want to be clear, two things. Above here, I need a setup that looks like this, meaning structure, push above, close back in with a swing short for a short side trade, okay? Or I needed to trap back below the year-to-date high. Again, while NQ, and I stated this morning, I'll state it again this afternoon. If we look at the NQ trade, right, and I said this morning, if on the chart, here we go. This is the old NQ former high. I said if we trade above that today and hold above, the buyers would most likely get short squeezed. Sellers would get short squeezed very hard. That's what happened to us late in the afternoon. This is very important. This critical area right here. This is very important. Unless NQ is trading below this point, don't believe the hype to the short side. Buyers are in absolute control. Okay, this is pretty much my trap point. I want to see it not only trap. I want to be convinced that it's to the short side. I want to be clear, as long as we're at new highs, long side trades will be easy. We're just going to have to be patient to get the rotations down. Okay, I will probably still test, but I'm less eager to test to the short side at new all-time highs. Doesn't take rocket science. I need a higher litmus test to make that work. Okay, let's keep going so that this makes sense. On ES, tomorrow morning, if we gap up, okay, obviously we want to see, do we get gap fill? Do we get half gap, right? Just like this morning, we got 3 bars higher over here so everyone sees it. Awesome. Not responding. That's exactly what you want to see. Let's see if it'll fix itself here. Okay, we will pause this. Okay, let's try this again. We can move this here. Let's see, where was I when I left off? Oh yeah, okay, so first of all, tomorrow morning, gap up, open drive higher. What does that look like? Well, it could look, as I drew pre-market, we are looking, this is very close to an open drive higher right here. It obviously turned into a trend day up. Again, it was 1 bar off from bringing it picture perfect. No gap fill, half gap came in, buyers in utter and total control here. Okay, so tomorrow morning we want to see, are we going to gap up if we gap down? Gap down, I would expect almost immediate responsive buyers back up. If we get something other than that, we can adjust, but my suspicion would be we're going to get immediate response up at, if not right out of the gate, shortly thereafter, right? The next thing is if we gap up, first question is, can we get back below Monday's high if we gap to the upside? If we can't get below Monday's high, we're going to be caught in a bit of a dichotomy here, guys. Okay, and so here's the tricky part. Enki's broken to a new high. ES hasn't broken to a new high, right? So normally I would say first move into an open gap, I would short, half size, double stop. The problem is we could gap right into that, and then this becomes a coin flip. I want a greater than 7-point rotation into that open gap first time in there, and generally speaking, I want to be cautious with my shorts in this area. This is not automatic. I'll update tomorrow morning based on what we're trading. If we gap above this open gap, it is very likely that the push back down to the open gap offers support for a push higher up into the year-to-date high. So it depends on where we open as to whether I take the open gap or not. Again, I am hesitant to short right now until I see some evidence of counter rotations. Okay, so especially after today, we were getting no volatility, no counter rotations. Okay, the next thing I want to point out was about today. We saw, okay, so in the morning, all for the last 2 weeks, I've been pointing out, hey, shorts are tough, I want a long side bias. I want a long side bias again. Of course, the first day I go on to take the shorts, I get run over at the zone, but that's fine, no big deal, right? That was bound to happen sooner or later. I want to state this emphatically. Long side trades will be easier than short side trades. And if you'll be patient and wait for the long side trades, you should be very nicely rewarded, okay, and a whole lot less stressed. Secondly, we want to see some volatility in the bars. If we don't see volatility, you're probably better off going to find something else to do, because it becomes very stressful to figure out if we're going to rotate up or if we're going to rotate down, right? Our key trades are going to be 10 to 20 point rotations lower for trades back to the upside. Let me see if there's anything else. NQ, critical that NQ gets below the former year-to-date high. Go look on the chart. I posted it. You'll see what I'm talking about there. And then lastly, for support on the downside, we close at 2094. I do not imagine we're going to be able to get below this open gap, but if we do, the key areas below 2080.82. This open gap and today's low should provide an initial response back to the upside. And then last week's low to 2068.25. This should provide a good response back to the upside, and then 2066 to 2064, that would be 30 points down from 2094. I do not expect to stretch beyond that. I think all of these should provide good rotations back up, along with the traps back to the upside that I'll call out in the room. Let me see if I've covered it, think through everything. Let's go through this. Buyers are in control. Shorts are going to be more difficult than longs. We're looking for rotations down. Obviously, the big news for the week is the non-farm payrolls. NQ's broken to the upside. Okay, we've had breakouts before. If we're patient, we'll get rotations down. I think 20 to 25 is going to be key for some really great trades to the upside. I think the key is surrendering quickly. If the shorts aren't working, just stop, right? Even though today gave a nice rotation out of this zone, came in the last hour, I think afternoons are always more riskier than mornings. And I think that you should at least use the marker of rotations. I didn't expect to get blown straight through that zone, but the zones were still placed in logical locations. You notice I give them plenty of room really up to this 2108, 2110. If you take the short at 2105, you got to give it room to 2110. Please keep that in mind. I don't know where they'll respond off to, particularly with buyers are in control. I want to see if there's actually rotation out of this area. And I'm more inclined to wait for larger rotations down for pushes back up than I am to be overly eager to short. That means you can do 1 or 2 strategies. You can choose not to short. You can choose to cut your trade size on shorts. You can choose to cut the time allotted to allow a short to work, right? And let's see if there's anything else. 10 and 20 point rotations down, those are key. Guys, that's what I got for tomorrow, right? I mean, really, the market's breaking out, and I want to see evidence of weakness before I get overly aggressive on the short side. I'm not even sure it's worth the effort at this particular moment. A lot of shorts had their hands forced today and had to cover, and that's been the way for the last 2 weeks. The long side's been easier than short side. We were in balance all week last week, and we broke out of balance today, and we should get, with trend day up, we should get continuation at least overnight and into the morning I would suspect that we're going to gap higher. As long as we hold overnight, say really 2089. As long as we can hold 2089 overnight, buyers are under control, should be able to push up to here, and obviously 2114 to 2117 is now a real upside target and easily achievable. That's 20-point rotation up. And I'm not overly bullish. I don't think we're going to the moon. I'm just not bearish until I see some evidence. Anyways, guys, I am tired. Had a long day. I thought we did a really good job overall. It seemed like everyone in the room composed themselves really well. This is a frustrating day when there's no volatility. The volatility will return. Keep your powder dry. Keep your down days very small. We will get large rotations again, and there will be happy days again. But these are slow, long, grindy days. Have a good night, guys. I'm going to get some rest. Talk to y'all tomorrow.